All right, good morning. Hey, everybody, or good afternoon, depending on when you're watching the replay. My name is Whitney Nicely East, and I am the principal broker for Whitney Buys Houses. We are a real estate firm in Tennessee and in Georgia. I've got my license in for the state right now to be the principal broker and principal auctioneer for Nicely Done Auctions, and we'll be in Tennessee and Georgia also. So I'm all real estate all the time, and I have Julie Anderson Thacker with me this morning.
Good morning.
You want to introduce yourself?
Julie Anderson Thacker with Tennessee Valley Realty Associates. I'm an affiliate broker and property manager.
And we have Anna Whitworth on the line. Anna, you want to introduce yourself?
Good morning. My name's Anna Whitworth, and I work at United Capital Lending. I'm a a senior mortgage specialist, and I've been in the business for 10 years, always looking for opportunity to grow.
All right, great. So you and I have done some other kind of interviews, and we put them up on YouTube, and they were awesome. And how long did we hang out that day? 3 or 4 hours just going through videos?
Long time.
It was fun though, right?
It really was. And actually, I've had people that remember, they remember all kinds of stuff like that, but that actually called me. And it was good.
Good. I actually had a property manager. I didn't tell you this. She sent me a Facebook message yesterday asking who I had on my blab last week, and I sent her your name.
Awesome.
So you don't know. Videos are the newest, best way to get your name out there. So we'll share this on Facebook later. Here, we can put it on. I'll share it to Facebook now while we're talking. Join us.
Taking it up a notch.
Right. Oh, I could have tagged you both in there. Sorry. I'm new to this Facebook thing.
And first and foremost, I'd like to apologize for the lighting. I look a little green today. I don't have the natural light in here. I have a request for a window office, so hopefully that'll be coming soon.
Now, Roger, you need a corner office with a view.
I know, right? I need his office.
Let me know how that works.
Exactly.
So now tell us, you handle mortgages.
Yes.
And is that on new construction, any kind of construction? Like, I have a weird issue. But you tell me what you do first, and then I'll tell you about my issue.
Basically, we do all kinds of mortgages. And if I can't do it, I have roots in the industry, so I can always refer you to someone that I know can help you. So I'm kind of like the one-stop shop where I have agents that will be like, hey, I got this deal. Who do you know? Is there anything you could help me with? I'm like, I can't help you, but I know someone that can. Because, it's all about helping each other out. We're all in it together. And at the end of the day, it's all about the client. And I want to make sure that they're going to be handled and taken care of in a proper manner.
And so if an agent brings you a buyer, do you get them pre-approved before that agent takes them out showing them houses on Sunday? Or what's that process like? Do you just wait until they found the one and then figure out if they're credit ready or mortgage ready?
No, it's all about timing. I get a lot of calls and it's like, oh my gosh, this guy's falling and I need to get pre-approved. I found this house I really like. It's a buyer's market right now. So timing is everything. And if you're out there looking and you have an idea of I'm going to buy in a month, I want to buy in 6 months or a year, that would probably be a good time. You need to know what kind of financial situation you're in, what you can afford, what you need to be looking at, and be pre-approved. So when you do find that one, you're going to be ready. And you're not going to be rushing and trying to get things done and shooting from the hip to make sure that, you're handled. Your financial situation is going to be fine. So
how long does that pre-approval letter last?
Basically, we could use credit that's 90 days or newer. But if you've changed any kind of financial situation, you've got a new job, you have a new raise. Some programs I work with are income sensitive. So you've gotten a raise, you've taken out more debt, you lost your job. Anything like that, you really need to let me know. A normal pre-approval is pretty much good for as long as, I would say, 30 days. 30 to 90 days. There's times when we get carried away and, you take 3 months to find a house. you need to keep me in check. If something happens on your end, I need to know to make sure that the program that you're wanting to qualify for, you're still eligible. So.
Okay, you said something kind of interesting, and I'm not sure that everybody caught it. You said that people need to let you know if they've taken out new debt.
Right.
What does that mean? Does that mean I went to Kohl's and they told me I'd get 20% off if I took out a credit card? Or is that if I went and bought a new car with my tax returns?
Yeah, anything. Or you pay off a debt. I need to know if you've paid off a debt, you have a new credit card that you've taken out, you've paid a loan off. I need to know those things because you could qualify for a little bit more or a little bit less, or it could disqualify you altogether. And we can go into that in a little bit later in more detail. But any kind of financial decision that you make when you're wanting to buy a house, you need to let your loan officer, your mortgage advisor know.
And that includes, I mean, even small things. Sometimes like signing up at Verizon or T-Mobile if you're going to, take a loan out on a new iPhone, right? I mean, small things.
Right. Small things. You take out a $25 credit card for Christmas. Well, that could be a $25 payment, on your credit report. So believe it or not, people like to buy like at the top of their limit sometimes. And I'm like, hey, do not do anything without consulting me first, because it really, everyone's excited. They got the warm and fuzzies and they're buying a house. And then I have to update their credit because they've taken a little while longer than what we expected. They didn't tell me that some things had changed. So my best advice is if that happens, let me know. I mean, I'm kind of like an attorney. You need to let your attorney know everything so they know how to prepare. And we're not scrambling at the end trying to get stuff paid, close this off, deplete your checking account that we once needed for your down payment.
That's what I was going to ask, Anna, is when is it that you find out if they have not told you about new items?
We could do a 90-day, we could use a credit report for 90 days. Okay. Right before closing, we do a soft credit pull. It does not count as an inquiry on your credit report, but the underwriter wants to make sure that there's no additional debts that have been taken out, such as a loan for your down payment or a collection that has shown up. So you would think that in a perfect world that would never happen, but it does.
It does.
And it does. And everyone's like really excited, wanting to close in 3 days. And then it's
I've seen clients go and finance furniture the day before closing.
A refrigerator.
A lawnmower.
Where are you going to put that? Because
I know.
Wait, don't
get closing right now. You need to take it back and close out the account. And they look at me like I'm crazy. But, mortgages, there's an art to it. And it's all about problem solving all the time. Even when you might think that it's not a true problem, in an underwriter's eyes, it could be. So what I have to offer, I've actually been in the business for 10 years. So, I mean, I know how to problem solve like nobody's business. But I've also worked as a wholesale lender. I've sold money to banks. So I've seen all kinds of scenarios come across my desk from other loan officers. So if there's a quirky situation, I've probably either heard of it, seen it, or closed it. But you need to be honest with your loan officer.
Oh, wait a second. I thought banks had all the money. How do you sell banks money?
Sometimes
I thought they were making money hand over fist with my interest rates.
No. There's outlets. Basically, I was a wholesale lender. So as a broker, I once was a broker, I had 15 different lenders that I could place your loan with. What I'm saying is at one point, I was one of the 15 that a loan officer could pick from. So it opens up the gates to allow you to pick and choose who's going to be the most flexible with this type of problem, or who's going to have a problem with this, or who has better pricing on rates, or who has better, that situation, who's better at 100% financing, who's going to rate me across the coals on that. So, it's true. Problem solving constantly, always trying to find ways to make it easy for everybody. So at one point I was a lender. I worked the East Tennessee region. So I shook a lot of hands of loan officers, mortgage originators. And so they came to me. I was actually pretty good at it, but they would call me all the time about scenarios. So I would be like, yes, no. So I've seen some weird stuff and I've closed some weird stuff, but that's where experience comes into play.
Okay. So tell me, and this may not be, you can tell me if this is none of my business too, but in America, we're pretty much sold that we're going to max out our credit and our mortgage limit when we buy a house. So, do you have any statistics on that? Like if I qualify for a $100,000 house, and that's kind of what got us in such a bind is that, I could get a mortgage for a $120,000 house, right? So have we straightened that back out, or what's the update on that?
Okay. So some programs have actually loosened their guidelines. Some have tightened up. Programs such as 100% financing, they've tightened up. They're a little bit more picky. I don't know if they're trying to clean their books up and keep, the good candidates coming through. But also, programs such as the VA has loosened up just a tad bit on their credit score requirements. Unfortunately, everything is pretty much based on a credit score these days. You've got to have that magic number. And sometimes I look at a credit report, I'm like, how in the world do you have that credit score? You have limited credit or you don't have credit. But, it's my job to try to paint the picture. And I know how to put a good file together. I know what an underwriter is going to turn their nose up against, I know what they're going to be okay with. It's compensating factors. Mortgages is all about painting a picture, writing a story. Sometimes, it's not going to fit in a box, and there's going to be some compensating factors. Again, that's where experience comes into play.
And
as a whole, I would say that it has the opportunity is there for anyone that wants to buy a house. Sometimes you just have to put in a little bit of elbow grease just to get it done. So,
okay, we're all kind of young here. Okay. 30s, 20s. We're in the younger bracket.
I'm 18, so.
But my question is, a lot of times our generation, and especially the kids younger than us, they're getting a lot of flack for not, graduating college, graduating high school, going out, getting a loan, doing this and that and the other. Do you see a lot of younger people coming to get a mortgage, and do they have to have a co-signer, or what's the younger market look like out there?
So happy you asked. Actually, I closed two. Well, one was 18 and one was 19 last month.
That's
Believe
awesome.
it or not. And I always take extra care in telling them that I'm so proud of them. I have seen them come out of high school. We've used their high school as their employment for 2 years. I've seen people come out of high school with like mid 700 credit scores.
Absolutely. Buy a house before you get in college and screwed up.
Yep.
Trade lines. I've seen their credit that I'm just like, oh my gosh, like you're perfect. Can I clone you? Because I think a lot of it boils down to how they're brought up. And, when you're raised and you're raising kids, you need to let them know that credit is probably one of the most important things when you get out of school, that you need to make sure that everything's in line, because one day you're going to want to buy that new car. One day you're going to want to buy a house. Unfortunately with student loans, they don't really pull your credit, which I think that's a huge, I think that needs to be adjusted. I know education's for everybody and all this, but then again, when you get out of college and you have $80,000 loans, and your income's only going to be $30,000 a year, you're going to have a hard time paying.
And it will hurt your credit if you don't make those payments.
Exactly. I think they need to be federally mandated. I mean, most of them are, the private student loans are, but not, the FAFSA student loans are not. So.
Right.
And I'm going to pick on you. How are you getting the word out to the younger generation then? I mean, are you posting this on social media and getting it out there to them?
Girl, I'm trying. No, a lot of it has to do with my market of where I do my marketing, and some areas I can't say that some areas, it needs to be all areas. All the young kids I would love to go work in high schools in a business class and be able to tell people how to do it. But it's just getting through the doors, and not knowing the right people. I would love to do some marketing though, because I think it's very important, because when you do get out, your credit, some people are always taught cash, cash, cash. No, one day you're going to need to rely on the banks.
Yep.
Not all banks are bad. So,
no.
Have you thought about that? How you would want to market?
I have so many ideas because I feel your passion in that. And I was just like, oh my gosh, she needs to tap into that like right now.
When I got out of college, I had already bought 2 cars. Like, my parents co-signed for me, but I already had a credit card. It's just the simple things that you can do a little bit different and teach at home. So when your children do get out in the real world, they're going to have it all, figured out and situated. Because not everybody's going to go to college. Some of the best advice that I ever got that I did not take was in college. I was working full time. I worked full time throughout college. I had the income to buy a house. I was working full time. It was never a part-time situation. And an agent came to me and said, you should really buy a house for what you're paying in rent. And this is back in 01, 02. You should really buy a house. You have it. You have it all in order. Good, great credit. It was all there. And I didn't take her advice. But looking back, not that I'm regretful, but yeah, I am pretty regretful, because the sucker, if I did a 15-year mortgage on a $70,000 house, it would be paid off.
Mm-hmm.
And I would have
a house now, or you'd have a free and clear house, and we'd be
poor. I wouldn't have a mortgage on my house right now. But it's just the advice that I should have just taken, and I didn't, because I was fearful. Fear is like the number one deal breaker in this industry. Timing and fear. If you have fear, it hinders you from making better decisions in life. That, could you imagine being 32, having a free and clear house and paying it off, and then buying another one and basically close to having that one paid off at the age of 33? So if I saw that agent, I would hug her and just tell her I'm so sorry. I wish I would have done that. That's one thing that I wish I would have done.
Well, is that what you're telling the younger generation?
Yeah. It's just like getting married, buying a house, having a baby. You're never going to feel like it's 100% the time is right. You're never going to have enough money. You're never going to have enough time. Sometimes you're just forced to make those changes. Not forced, but you get what I'm saying. Timing's everything.
I like what you said about serious feedback.
Oh, I got some hearts. Or I got some praises.
Yeah. Al's on here. He's great. He's an investor. You said that people could pay less in their mortgage and they're paying rent on an apartment. And how important is that for people to get through their head?
Very important. Some people love to rent. They love to
say this.
Some people, that's fine. It works. It's not a bad thing to rent. Low maintenance, no maintenance. Some people are meant for that. They travel a lot. They can't maintain a home. There is a lot of maintenance to owning a home. I'm not going to lie. I bought one in April, and I still feel like I'm totally like turning screwdrivers left and right. But it's a renter's market right now too, or a landlord's market, because people are moving out of their houses and going back to renting. So the cost of rent has actually gone up too.
Hold on. Michael wants to tag in. I asked him what his question was, but we'll see what his question is here for us.
Can you chime in on that, Julie? Rennie?
Yes.
Hey,
Hey,
why
Michael.
is it everybody has weird voices? What's going on?
Say that again.
You sound like
He said everyone has a weird voice going on.
We do?
Uh-oh.
y'all sound like
Is it my internet connection?
yeah.
You sound like you have a voice disorder, but we can. I think I can hear you. Thank you.
I can't understand y'all.
You're talking to
I can't
Alvin.
understand you for real.
Yes.
Yeah.
Are you Simon and Theodore? Living everyday life. How do you pay off other bills? You know, how do you prioritize which bills to pay off?
That's a good question.
That's a very good question.
To pay off.
Dave Ramsey would tell you to pay off the small ones first and then roll them, eventually. Can you hear me okay? Okay. Once you pay them off, then you can start applying that payment to the other debts. What I recommend is maybe get with the loan officer and have her, if you're seriously considering buying a home, I normally would tell people to pay off the ones that are maxed out or above 75% credit utilization. So if you have $1,000 credit card and your balance is over $750, you really should probably pay it down to $250 or less. Don't close it. Just keep the credit line down, because the last thing you want to do is look like you're overextended on those debts. Once you do that, your credit score, I could seriously get a credit score up 30 to 40 points just by telling a client to do that. Yeah, because a lot of times that is what's hurting your score, is over the limit. It actually is horrible on your credit score. But I'm not saying every situation is that, but for the most part, I would say 90% of the time I can jump a score within 24 hours. I'm sorry.
What about people with 2 years? Can you get those put back on good standing? You know how they place
Like a garnishment?
judgment, but how they automatically
Okay.
take it out of your check. Put it back in good standing if it's being done.
If you have a collection or a judgment that you've been paying on, I'm positive that if you've had a perfect pay history for 12 months, then we would view that as not being delinquent, that you've made payment arrangements. Some lenders, I think it's 3 months. Don't write that in stone, but there's options. The only thing that normally needs to be paid off is a tax lien on your credit.
Oh, okay.
A federal tax lien.
Yeah. Okay.
You're welcome.
All right. Well, thank you very much.
Thanks for stopping in. Hey, and Al had
Alvin.
I wish I could do their voice. I would so sing along with you right now.
Bye.
Thanks, Michael.
Okay, Al asked a question. Is the pay for deletion method good when negotiating with collection companies? And will you explain pay for deletion? Like, I understand what he's saying. Will you explain it for the general public?
Viewers, yes. Okay, first of all, it depends. When you get in there and you have all these collections and you start negotiating with folks, you really need to stay very close with your loan officer at this time, because some are not going to necessarily matter because they're so old. If you say you have 5 collections, some of them are from like 2000, okay, and you have all this money, you got your tax return, and you want to buy a house and you want to pay them off, but you fear that if you pay them off, it's not really going to help your score. In some certain circumstances, you could pay off a collection and have the collection agency actually delete them from your credit report like they never happened. Okay. In this situation, someone would call me and I would use my little program and I would say, okay, normally if the collections are all with one agency, they're going to want them all handled in order to give you delete letter. Okay. And so what if they're old? You know, it's just one of those things. You got to pay them all. They're not going to give you delete letter just for one. Now, some situations you have a collection from like 2000 and you want to pay it off. That's probably not going to help your score because after a while, it doesn't weigh so heavily on your score. Say last month you got a Comcast or Verizon bill that went to collections for $175. Yeah, your score just tanked naturally. It did because it's so new. Your score probably, it could have dropped 80 points in a matter of a month because the collection was so new. So you call me up, Miss Anna. I have $180 from the tax return, from my tax return. I need to pay this off. I'm like, all right. I'll run a system and do a what if to like, what if we paid this off? What will it do to my score? I can get your score back to where it was, if not better. But they have to delete it. Sometimes you can pay them off if they're that new and it'll actually help your score. Sometimes you have to delete it. When you pay off a collection, you need to negotiate with them. Hey, if I pay you off cash, because cash sells, if I pay you cash, can you give me delete letter? Negotiate that up front. It's harder to go back after you've done it, and I mean they're done with you. So you need to make sure that you consult with your loan advisor on which ones to do and which ones to not do, because you could really, not saying that it's not the right thing to do, but you might need that money to buy a house. You don't want to throw it away on something that it's not going to help you.
Hey, when you talk about cash, I had a guy yesterday. I'm doing a rent to own on a house up in Talbot. And he said that he was getting his tax return back and he'd come bring me a large chunk of cash. And I told him not to do that.
Right.
He needs to bring me a cashier's check for that amount. Will you talk a little about why it's important, especially if you're renting and you want to buy a house? Cash is king, right? I mean, as a landlord, I love cash. But for my clients,
yes,
I want them to use a check. Will you tell them why I want them to use a check?
Cash is great. All right. I'm not saying it's not great. It's great for the gas station. All right. It's great for Walmart. It's great for yard sales and flea markets. It's not great for buying a house. I cannot stress this enough because you have to create a paper trail.
Yes.
Mattress money is no money in my industry. You have to show where the money came from. You have to source it. It has to be in an account for at least 60 days. Okay. 2 months worth of bank statements for us to be able to use it. You can't pop $5,000 in an account with cash and expect our underwriters just to turn a blind eye to it. You have to source that. Okay. Because they want to make sure, they want to know where it's coming from. For rent, some programs, we have to verify rent. If you have a kind of a slim credit history, we have to verify rent. The best and easiest way to verify rent is going to be canceled checks, cleared checks from your account. You know, there are some situations, Roger, this is my boss, sorry.
Hey, Roger.
There's some situations where, I don't want to go into it, don't use cash, all right? Use a cashier's check at the worst case scenario, but also you're going to need that checking account for a mortgage.
Yes.
So
now,
you need to have a checking account, and at least for 2 months with some money in it.
I know good and well that a lot of landlords, and Julie, you can back me up as a property manager on this, a lot of landlords want you to pay in cash.
We need to do a lunch and learn.
Okay, you set it up. I'll be there. That sounds good. We can handle that. Okay. All right. All right. Tell me your biggest win, somebody that walked through the door and you thought there was no way anybody was going to get them a loan, and you were able to secure them. And then tell me your biggest disappointment. Like you went all the way to closing with somebody and then they did something stupid.
Oh Lord. You have enough time? I'm just kidding. I'm just kidding. I'm not trying to be negative. Quickest score rebound. A lady called me and she was trying to buy a house. Didn't feel like she could. She had a low credit score. Lord, I'm trying to think of what her credit score was, like a 560. I mean, it wasn't horrible. It was something to work with. It gave me a good drawing board. What
is horrible credit? People tell me they have horrible credit all the time, and it's like 525. Is that horrible, or what is horrible?
It's worse than fair, but we need to be honest with each other, right?
Fine. They need to come rent if that's the case. Julie.
Horrible credit is anywhere, I would think 450. I mean, you got to try to have a 450. I mean, you really got to be messing up left and right. A 525 can just be some collections that need to be deleted, and a credit card needs to be open. Okay. Don't fear your score is that bad. You need to call somebody, because you know what? I talked to a gentleman yesterday. He has a 541 credit score, and I'm like, you need to pay this off. You need to get these 2 collections off, and your new credit card's going to show up, and you're going to be at a 680.
Wow.
And I can get this done. Well, the longest part about it all is probably going to be the credit card showing up, because they have to naturally show up, and sometimes it takes a month to cycle. But he was like amazed. He's living in a hotel right now. And I'm like, he's like, you're like the greatest thing ever. No, I just took the time to put a plan together for you. I'll give you the tools. You just got to do it. Yeah. I can't pay stuff off for you. So, but I'll go back to my story.
Okay. Yes.
560 credit score. And she had like 2 or 3 medical collections where the insurance didn't pay. Bless you.
Sorry.
Bless you. The insurance company didn't pay some of the stuff that happened to her in the hospital. Maybe $300 total, all 3. So I'm like, hello, ring, 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 Miss Client. Okay, I can get your score up to a 655, but I need you to call this one company. It was based here, is Revenue Recovery in Knoxville. They will give delete letters. You got to be persistent sometimes and talk to the manager, but I need you to call them, pay them, get me the delete letter. She got me the delete letter. Okay. Within 12 hours, I kid you not, 12 hours, we got her score up to a 655.
12 hours?
12 hours. I quoted 24, but she gave it to me. She gave me the delete letters. She paid like at 4:00 on, I don't know, a Thursday. She got me the delete letter like 9:00 on a Friday. And within 12 hours, it was probably 6:00, whatever that is. 9 hours. We had her score up. They did a rapid rescore. And we closed on her like 3 months ago.
Wow. That's like 100 points.
She saw one of my videos. Yeah.
Wow.
Yeah. I'm dead serious. It works. But you have to, and I tell people this, you have to do exactly what I say. And I know that sounds really, that sounds bad, but if she would have just paid them off, it wouldn't have helped. Nope. I said, you pay them off and you get the delete letter on all 3 of those, and your score, it should be this. And she did. I said, no delete letter, no dice. But she did exactly what I told her she needed to do, and she did it in a timely manner.
Did the men listen to exactly what you tell them to do?
He's working on it.
Are we talking about Roger again?
No, he's going through a divorce situation. He's going to do whatever it takes. He wants to buy a house. He wants to move on with his life. And I said, he has money. He has money in the bank. And I said, we need you to do these small 4 little things. 3 of them are already in the works. The other one should be coming in the next 2 weeks. And he said, okay, I'll do whatever it takes. Thank you for taking the time.
And this guy's living in a hotel right now.
Yeah.
I don't pull him out of a hotel and get him in a house.
I do not discriminate, girl. I will get it done as long as they're willing to get it and help me, because I can't do it for them.
So tell me, maybe a better way to word it is the most frustrating closing you've ever had, or somebody that just would not listen to you, would not take your advice.
I was doing a refinance, and I was saving the people like $600, which is, that's a big chunk of change for me. Yes, $600 a month. We were reducing the rate, and we were paying off some debts. So, and it was a husband and wife. We get 2 weeks out from closing, appraisal's already done. Everything is like great. And it took him a while to make the decision to do it. So the credit was kind of nearing, it was time to repull their credit. They took out 2 new car loans. And it ate up a $500, $600 a month savings.
Oh.
And you can't take a car back after you do that. It's not like furniture or a refrigerator. And I was just like, I'm sorry. Like, I told you. And I don't want to say I told you so. I told you not to do that. But I told him not to do anything that could, jeopardize the deal. And they were upset. But it's just kind of like one of those things where they were just eager to save money and buy new cars. We didn't close.
If you're giving somebody $600 a month on their mortgage, that sounds like a pretty nice house. Like somebody that is probably well educated and should have known better.
Should have known better. And we were lowering the rates. We were cutting it almost in half. They had like an 8% interest rate, and we were cutting it down to a 4%. But it was an older loan. They had equity, and then they were pushing it on paper. They were over the limit on their budget when we started. We had to consolidate debt just to get them down to be able to do it. And then they went out and got 2 new car payments. And then they were mad at me. Help me understand, where did I go wrong? Because I don't know. I don't know. Anyways, next.
All right,
but it happens. I've had loans where a school bus driver retired the day before closing. Retirement is a choice. Okay.
Day before closing?
Day before closing, because we have to verify employment 10 days before closing. We normally do it. Well, now with TRID, we do it. That's a whole other episode. But
yeah, that's another one. Yeah.
We verify about 4 days before closing. You better make sure you're still working, not retiring, or on FMLA, or on maternity leave. You got to make sure that you have the same income that you had or better when we started. Retirement's a choice, though, right? Retirement's a choice.
I don't know this.
If he could have just waited a week, it was a refinance. If he could have just waited, I could have prepped him for his retirement. If I would have known that, I'd have been like, no, we need you.
That's a life-changing event he should have told you about.
Retirement is a choice.
Treat your realtors and your loan officers as if they're your lawyers. Tell them every
BFF. Best friend forever. Tell me. Yeah. Tell me. I don't care if it's, I want to know what's going on.
Yep.
You've probably done it before, but if you've not,
I need to know if you're up for a raise. I need to know if you're getting a new job. I need to know if you're leaving your job. I need to know if you're leaving your wife. I need to know. Or your husband. I need to know these things.
Yep.
Because these are the little hiccups that really could cause a lot of frustration. And at the end of the day, I'm your person that you're trusting to handle all your financial situation. like all your finances. I need to know everything.
Yep.
I hope they tell you, Anna. All right, you got anything else you want to add before we sign off here?
I think I'm good. If you know anyone or have any questions, feel free to call me. I'm in Tennessee. My number is 865-679-9765. You can also hit me up on Facebook. It's Anna Whitworth, WHITWORTH, and it's Anna Whitworth at United Capital Lending, or you could Google me. You'll find me. I'm here in Knoxville, Tennessee. So.
You have lots of videos on YouTube now, don't you?
Yes. I need to get those from you, actually, by the way. But thank you for having me, and it was all a pleasure seeing Miss Julie.
You too, Anna.
All right. Again, if you want to get in touch with me, my website is whitneynicely.com. You can send me an email, info@whitneynicely.com. Julie, want to leave your stuff too?
Yes, I am at TVRA, as in Tennessee Valley Realty Associates, soldit.com.
Very good. Anna, did you give us your, what number is it?
That little number, my license number, I can give it to you. It's 15642.
All right. I just want to make sure we got it so that nobody gets in trouble, right? We are all professionals here. We are licensed, ready to go to real estate.
If you guys need anything, reach out to me. Okay, call me. And
all right.
Whatever I need to do, I'll help you out.
All right. And we'll have you over for our coffee date one day.
Cheers.
Yeah. Mine left.
Cheers.
He's got mine too.
Okay.
All right. Bye. Have a good day.
Thank you.